The GDP numbers came in and my goodness, they were fantastic. I mean, who could deny the best numbers ever in the history of the US? Except there's just one problem. They're coming off of the worst numbers in history. The fact that the government expenditures were the most ever in such a short period of time, not to mention the GDP itself is a failed statistic to begin with. Can they pull back all the stimulus now that everything is apparently fantastic in the economy? You came here for the truth, so let me unveil that for you. This is the question I pose regularly. If everything is so fantastic, if it's so amazing, why are you printing all of this money? This is the question I ask so many people, and yet I never get a response. If everything is great, if there is no inflation caused by money printing, if the stimulus has no negative impact, why don't you just accelerate it? Why would you just give out $2 trillion to the public? Why not make it 20 trillion? Why are you expanding the balance sheet to a level of $7 trillion when it should be 14? Why not 50 trillion? Why not 100 trillion? There is really no downside in what I have read according to the mainstream, according to all of these amateur investors. So why not? And that is not a rhetorical question. I am actually asking it. So please, if one of the haters are here, I want you to put that message below in the comments and we can talk about it. We can discuss it instead of simply saying that everything is fine. We know that that's not the case. There are pockets everywhere. If you work for Boeing right now, you might not be in a good position. If you work for Disney right now, might not be a good position. If you work for Exxon Mobil, same thing. But if you work for certain industries, you might be doing the exact same thing you were 6 months ago and a year ago, and that is great. It depends on where you are, but the mainstream is not going to highlight all of the things that I do because they're trying to sell all their advertisements, they're trying to sell products and services. So of course you're not going to see that. The vast majority of the information out there is not going to have any of these nuances, and that's what I am here to do. If you want all that stuff, you want to know what stocks to buy, 7 shares of Amazon and all this business, there are so many resources out there. They're going to tell you buy this, buy this, buy this because they're paid for by these companies. That is other information that you can get elsewhere. Why do you want me to talk about the 7 shares of Amazon when clearly we all have 7 shares of Amazon? That's what this channel is about. It's about buying 7 shares of Amazon and living like a trillionaire. Let's begin. US GDP booms at 33.1% rate in the third quarter, better than expected. Wow, this is so fantastic. I mean, they expected 32 and it's 33.1. Well, you can look at the actual rate and you can see how this looks like after coming down so heavily. Well, maybe something else is going on. US economic booms and busts. The chart goes back to the 1870s and you could see all the way up until the present. There have been many, many shocks over the years, but we know that right now, today, we're looking at historic times. We have never seen such contractions before, and it is just brutal. But come on, look at what has been going on. Really, in my opinion, what is the most important is that over this period of time, we have seen less growth coming out. We are pumping more money in. The interest rates are declining. The suppression of interest rates done by the central banks, in this case right here, the Federal Reserve, has been truly excessive over this period, 1980 and onward, and yet we're getting less growth out of it. We're getting less production out of it. I read the statistics I've shown you not that long ago. Real Investment Advice put that up. Something like $7 or so just to get back $1 in GDP. Does that sound like a good deal to you? I really don't think so, but that's what we do. This is what all countries do, and that is truly unfortunate. US GDP, you can see right now what has happened. It is something to note here when you look at the contraction and then subsequently the growth afterwards. It's never going to be able to get back on that trajectory, just like Back here, 2008, it slumped down, and then the growth, of course, afterwards doesn't have that same charge. Same situation happening today. It doesn't work like this, and that's why as the years go on, as each recession hits, there's further and further and further weakness. It isn't because, oh, the economy is growing, the debt is growing. The economy isn't growing in the way that they tell you. If you look into it deeper, you start peeling back the layers, you realize that this is all about debt. And the problem with debt is that unfortunately, it creates a big divide in between the haves and the have-nots. And people feel, well, I'm part of the 1%, or maybe I'm part of the top 10%, but slowly but surely that will erode away. Here's an important point about the GDP. Check this out. The US GDP jumped at a 33.1% annualized rate in the third quarter, a growth of 7.4% from the second quarter. But as Gregory Dackel, the chief US economist at Oxford Economics, put in a tweet, that growth is both record-breaking and meaningless at the same time. Look, the next part here. It's true that the 7.4% GDP rise from Q2 to Q3 is a record, but it also comes after a record contraction from the first quarter to the second quarter and a total loss of 10.3% throughout 2020. So it doesn't even come close to making up what was lost amid the situation here in 2020. So you'll look at the numbers, wow, that's fantastic, the growth is there, but look at the total loss. You've got problems, and they're not going to be made up by the situation that is going on today with the stimulus. Oh, are we going to make the stimulus package 2 trillion, or is it going to be 1.5 trillion? And who's going to get the money? Where's it going to go? Divvy it up and so on. They're fighting back and forth. It's all nonsense. In fact, the 3.5% total GDP shrinkage during 2020 means, quote, we are still down almost as much as we were during the height of the Great Recession. Does that sound like a recovery to you? Of course not. It isn't, and they play it off as if they're doing so well, but it's all panic behind the scenes. Here's something interesting I wanted to show you. The green line, that's the continuing jobless claims, and you could see the direction. It is clearly declining from its peak that we had back in May. But on the other end, you're looking at the emergency unemployment compensation has accelerated dramatically. There are so many people today that haven't been able to come up on certain statistics, and they've been showing up on others. Okay, so you need to look at all of them to get the big picture. If you are trying to look at one stat all the time, the U3 unemployment rate, you're going to get such a short-sighted view of what's happening. Yet I see it all the time. I see the comments, I see the posts everywhere. I see other people that used to talk about what I talk about, and now they're disappearing into thin air. ECB hints at more stimulus in December, and you could see that they're doing the exact same thing as all the other central banks. They are trying to use forward guidance, which is basically, hey, we're going to do this, we're not going to do that. They tell them in advance and see how the market reacts to it, and then try to make everything all good with the markets, try to have the calm installed here. But we know that this doesn't really help enough, and all of their activities, whether it is necessarily coming from quantitative easing or maybe it's coming from some sort of stimulus package or loans or what have you, are ultimately just spinning the wheels because it doesn't actually help the economy. They know that, of course, but the central bank's activity is really meant to actually take everything and put it under their umbrella. They want ownership of everything. I've talked about this numerous times. There is more detail on there, but until December, there's nothing more than just this mention, so I'll move on. As always, you don't have to take that article's word for it. You don't have to look at CNBC for the information. I provide you the source itself. This is coming from the ECB's own website. I'm not going to harp on about it. Essentially, they're just saying it's business as usual. They're looking to expand the balance sheet if necessary. They're printing this, they're printing that. They want to be able to do at least, it says right here, 1.35 trillion. And then you look down here, they're talking about the 120 billion billion that they are doing. It's really just nonsense when you look at it, because their balance sheets are expanding. That's really all I focus on. Is the balance sheet expanding? Is it contracting? And what is the forward guidance? What are they saying that they're going to do in the coming months? And that just gives you an idea, because you look at it on a deeper level. And as far as I'm concerned, their plans, all of the central banks, their plans are very obvious, and it isn't what they state. Exxon to cut 14,000 global jobs, including 1,900 in the US. The global employees cut by 15%. That's pretty big when you look at it, when you think about it. Think about the company right here, Exxon. Back in 2008 was the biggest company, and now slashing the workforce by 15%. That is big, and that's just the beginning. Who knows what's going to happen 2021, 2022? We don't know how this will recover. Look, if oil comes up, if we actually see the price significantly rise, that could help this company, but it doesn't necessarily mean that they're going to hire back all their employees. This puts a real big dent into a lot of these jobs and people in the industry, because if Exxon is starting to lay people off, what are the competitors doing? They may not necessarily lay off as many people, but maybe they're going to put a hiring freeze in, or maybe they just hire certain positions. This isn't good. In this example, we are looking at what's been happening with so many of these companies. Look, ExxonMobil versus Zoom. The market cap has actually surpassed, Zoom's market cap has actually surpassed Exxon's. The chart goes back from 2014 up until the present. And over the years, despite what we have seen in the economy, supposedly fantastic and everything, ExxonMobil, their investment here doesn't look so pretty, because it's been heading downward, and downward. And that gives you some insight as to what's happening in this whole environment. You can also see the fact that throughout this period, we have watched companies like Zoom with very little revenue, and they have done so well because, everybody needs to use this application now. Therefore, we should pump billions of dollars into the market cap. It is just mind-boggling to see. I mean, Exxon kicked off the Dow Jones after nearly 100 years on there. And like I said, a few years ago, it was the biggest company in the world. And it just keeps sliding down further and further and further. What's going on here? And, trying to piece it all together. I think that in the next cycle, there's going to be some very drastic changes. I'm going to end the video there. If you found this informative, please give me a thumbs up. When you do, you are supporting me. Thank you very much. If you want to learn how to sell stuff online, I have a free e-course, theamazongps.com. If you are interested in the financial system, learning about it top to bottom, everything you need to know is right here. Check it out. themoneygps.com has the audiobook as well. If you want to get the details, everything I was talking about are all really highlighted further in this video here. Have you seen it yet? If not, click it. I'll see you there.